fact, if you look at the performance over the past year, it's pretty much even with emerging markets. The Vietnam performance has been very good. And for emerging markets, the China performance has been a drag. If you look at markets like Chile, Brazil, they're all like booming.
Yeah.
Big these days, but the retail investors they're more tuned in. They're more like flexible than your big funds. Like they're the one, they started buying gold. The big funds haven't even started, right?
Nope.
And then there's been a lot of record inflows into emerging markets. That's not the big funds. That's all like these retail investors. The big traditional managers are very conservative, and they don't want to just jump in because it's going up. So.
I think we're seeing a fundamental shift that we saw, let's say, in the late 80s, early 90s, when you went from like a retail, heavily retail driven market to, with the introduction of mutual funds and ETFs, just a passive investing, a totally institutional driven market. And I think that we see the beginnings of a fundamental shift to go back to that sort of stock picking. And because I think just sitting in an index, which is what all these guys do, is not going to be very profitable going forward. Hi, Joanathan.
Hey, good afternoon. How are you?
Hey, Joanathan. How are you?
Yeah, not too bad. Thanks, John. How are you?
I'm doing good.
Joanathan, were you in Florida?
Yeah, I'm in Fort Lauderdale, Florida.
Wonderful. Well, considering how the Northeast is in a tight freeze, Jean's probably jealous.
We got 20 inches here.
Yeah, I can't compete with that. The only thing I can say is that when it goes below 50 in South Florida, you get a lot of fur coats and and padded jackets go on as people suffer.
Yeah.
Not quite the same thing.
Joanathan, thanks very much for joining us here.
Yeah,
what I normally
pleasure.
do is I'll give a brief bio and then we'll start off the questioning, but we kind of keep it kind of casual. So let's start. Joanathan, thanks again. You are the co-founder and CIO of Consilium Investment Management. You've been there since 2004, and your specialty has always been running money or analyzing the frontier markets and small cap EM. And obviously, we're going to talk about how great that's been over the last 12 months. You have an interesting history. You got involved in EM during the time when you had all these great, I don't know how many people remember these firms, but I remember them. Companies like James Capel, which was obviously one of the first in the emerging game doing research, Morgan Grunfeld, et cetera. So I think that you had a long history, and we'll probably get into that in terms of your historical perspective. And then you went to the buy side in, I think it's 1997 for a company called America's Trust Bank.
Yep.
You worked at Standard Asset Management, and then obviously being with Consilium since 2004. You're interesting enough. I saw this nearby. You were born in Bogota, Colombia, so you're a real emerging market. You got roots in emerging markets, which is great. So let's start this off.
More interestingly than that, actually.
Well, we can get into that.
I was just going to say, I think, yeah, it was my father was actually posted to Cambodia in the period of 1970 to 1973. So I was at boarding school in England, but I would travel out there for holidays and vacations. So I learned how to water ski on the Mekong, and at night the windows would rattle because the Americans were bombing the northeastern parts of Cambodia on the border with Vietnam. So it was an interesting experience. I wish I'd been just slightly older to really have appreciated it, but it was fun nonetheless.
Amazing. Well, I guess that sort of reminds me of the first sort of to open things up. You're with your obviously monitoring and being an expert in this frontier world. We have seen an incredible performance, snapback performance in emerging markets in 2025. Some of these markets like Vietnam and Colombia, in the EM side has had incredible moves, 50+%. From a historical perspective, some people would look at that and say, okay, this is a blip. US is still the place to go. EM has had just a sharp comeback. In your mind, what do you see as the reasons for this to be a sustainable move, or the beginning of a sustainable move in EM for a period of time? What's your sort of big feeling about it?
Yeah, well, I guess I'm going to slightly dodge the question, but still give you an answer, which is that I think that what good managers are able to demonstrate is the ability to make money for their investors, kind of no matter what's going on in the world. And yes, clearly there's been a backdrop for the last 6 or 7 years. It's been troubled for EM. Actually, I think it goes back to the day that Xi Jinping stopped the Ant Financial IPO about 2 days before it was due to happen. And that kind of called the top of the Chinese market, and a lot of EM investors were heavily invested in the kind of tech stocks in China that had been tremendous growth stories for the previous 5 years or whatever. And that was really, I think, kind of unpacked, if you like, the sort of the story for EM that has sort of stopped its performance at the index level for the last 5, 6, 7 years. But within that period, good managers have been able to make money both in EM and in frontier. The beauty is you've got 20 plus countries to choose from. You've got lots of different sectors, different companies. So I would say that, yeah, look, 2025 at the index level was a big snapback year, but I don't sort of regard that as important, one way or the other, because I think our job is to demonstrate that whatever sandpit you're playing in, or whether you're investing in global tech or global mining or frontier and small emerging like we do, there's always ways to make money. And yes, sometimes you can have a sort of a bit of a following wind. And as it happens, I think we've probably got the first signs of a wind that at least is not blowing in our faces in the last year. And as you mentioned, obviously, what EM is sort of trying to overcome is the sense that I can make so much money in the US markets, at home, quote, lower risk, although that has to be defined. Why should I bother being in EM? And then that sort of gets into both an asset class discussion, but also, a manager question. It matters, you need an active manager, in my opinion, in EM, because if you invest in an index, you don't have the ability to make any sort of comparative decisions about countries going through prolonged phases of weakness and poor performance, as we saw out of China for 5 or 6 years until 2025 when it turned around. But if you avoided that China problem, there are plenty of other countries where you can make money. And that's, I think, the heart of the question of, asset allocation should be all about choosing the right manager, not saying I'm not going to play in that sandpit. Every sandpit has opportunity, and EM has opportunity, has always had it. Frontier, small emerging, always has opportunity. It's my job to avoid the markets and countries and sectors that are going through a downturn, and find those countries and markets and sectors and individual companies that are able to have a individual sort of alpha raising performance.
Joanathan, you have a very, very fundamental process. When the markets start really moving like they've been moving for the past year, and they continue to move, and typically that's accompanied by big increases in liquidity. So you see, new investors coming into the market, and do you pay any attention to that, or for you that's completely irrelevant?
Well, I think that we do pay attention to it because it provides a backdrop. And sometimes when you're looking at stocks that have done very well, and you're wondering, if our fundamental bottom-up analysis combined with a little bit of top-down, let's say, and you mentioned Colombia, it's kind of interesting. There are technical reasons why Colombia did very well last year, mostly to do with the local investors, the local pension funds, and legislation that was basically coming through to force greater local investment relative to external investment. And then there was, I think, quite a lot of money coming in to index funds in EM. And that means that if you're a big cap stock in Colombia, you just simply get that allocation, nothing to do with what's going on in that country or the stocks there. So the answer is we don't let it drive our investment decisions, but we want to be fully aware because it can create, odd situations, and we need to understand those situations so that we can remain convicted either way, whether we're invested or not invested, and not be blown off course by what we would regard as maybe a sort of a temporary phenomenon.
Right, yeah. So typically, emerging markets tend to do well when the dollar is weak. And that's been, to some degree, the case over the past year. And a lot of investors continue bullish on the betting that the dollar will continue to weaken. I think you do too, as far as I know. Is that also is that fundamental? Can the markets do well overall? I'm not talking about specific countries, but can the markets do well if the dollar doesn't weaken?
Well, the historical charts would indicate that the correlation between the two is awfully close.
Yes.
So I think that sort of one way or another, and I've tried to wrap my mind around this, because there are so many influences in terms of the behavior of the dollar, the behavior of these local currencies, and obviously in '97 that crisis, most of the countries that we look at today are in much, much better shape than they were back in '97 when we had kind of the last big EM currency crisis.
Yeah.
So things change. And I think that, you have to sort of recognize that apparently from an asset allocation point of view, from the guys at the very top of the tree, they sort of look at it maybe sometimes in those simplistic terms, and you therefore have to sort of take that on board. But the way we sort of look at it is much more complex, as you said index, or talked about the aggregate, but we do really like and prefer to talk about the individual countries and their individual situations to see how that stacks up versus that simple theme that does appear to be well established. And I doubt whether that's going to go away. So we have to sort of be aware of it and thoughtful about it. But for me, again, it's an individual country and sector company decision that drives it the most. But I'm grateful for any following wins I can get.
Yeah, I guess the weak dollar is tied to liquidity, right? Because when the dollar weakens, liquidity improves in the markets. Then you get credit booms, and then it just builds a virtuous circle that can go on for several years.
For sure,
that's what history tells us.
That's what it
when
does.
You look at
And
specific countries, what are some of the key things that you focus on that are really important to you?
At the core, we want countries to have economic policies that promote good, capitalist, behavior, if you like. We want property rights protected reasonably. We want, low tax rates, encourage investment and growth. Very basic stuff, really, that enhances the chances of companies being able to invest and grow and become and grow their profits, etc. So it's a sort of there's a combination of quantitative things that you look at to assess whether the policies are sort of there or have they changed, and are the trends going to change or improve or get worse. But then there's a qualitative assessment that you have to make about the political leadership. And in some countries, that leadership doesn't really change that much because it's a communist or quasi-communist sort of setup on the political front. But sometimes it's also just looking at the election cycles. I mean, as we've seen in countries like Argentina, the democratic election cycle has been the sort of worst enemy of long-term economic reform in that country. And so, we've seen leaders come in with all sorts of grand plans, and they sort of do the right thing, but then they just run out of time. And so sometimes, I always sort of laugh that democracy is not necessarily the friend of the best economic policies. And you can go to countries where, there are what I would describe as sort of guided democracies, would be a gentle way of talking about them, like Egypt. But if I look at Egypt today, there's a country that sort of in the last 2 years plus has seemed to have turned a corner on its economic policy front, and seems to be committed to the right policies, both at the government level, at the central bank, and regulations, and promoting growth, promoting investment, obviously getting a lot of support from the rest of the GCC. So there you're just sort of assessing, well, this might not be a perfect democracy, but are the policies there, and do they have longevity? Can they last for the next 3, 5, 7, 10 years, which is sometimes the time period that you need to be able to have these reforms in place before they can truly bear fruit, as opposed to the kind of typical 4-year cycle that poor old Argentina has had to answer to.
So that's a big advantage if you have a more authoritarian kind of government. You can sustain policies for longer.
Yeah. Well,
go ahead.
Yeah, I have to be careful up to a point.
Up to a point.
I mean, you have got Nigeria, which is sort of a democracy that seems to function okay. But again, they suffer the same things. But now it appears that, they might get that sort of 2-term window that will allow for reforms to really, truly take hold in Nigeria, which has been sort of a bad story for a long time.
Yeah, I just I listened to a long interview with Joe Studwell, the article of the author of the one of my favorite books, so Why Asia Works, who's now written a new book on why Africa works, and I haven't read it yet, but I will soon read it. But he's a very smart guy, and Tyler Cohen interviews him. I listened to this week, and he had very favorable comments on Nigeria, pointing to Nigeria as a country that was, finally on the right track, and that didn't sound right to me. That's not. I don't follow Nigeria carefully, but I'm sure you do. What's your opinion on Nigeria?
Well, I think to sum it up, cautiously optimistic. I think the president did bring in a new central bank chairman and has brought in his people, and they did the right thing. They devalued the currency, raised interest rates, and they have therefore sort of bitten the bullet on that. I think the president has given support to that. They're introducing gradually reforms at the fiscal level, etc., that is designed to promote growth. I think they're making baby steps in dealing with Nigerian National Petroleum Corporation. I think gradually doing some things to reduce, at least at the margin, levels of corruption that have been problematic for the country. Obviously, the Delta region and oil investment, etc. So, look, I think they've. It's too early to call it in terms of it's done and complete and will be wonderful for the next 20 years. But I would say that it's about as good as Nigeria has looked. I would say in the 17, 18 years that we've been investing there. So cautiously optimistic, and if they which is I guess a little over a year away or so, it does appear that there is the likelihood that there will be a continuity of the president, and that will give them that window to see the policies come to fruition, which is what you'd hope will happen in the second term.
Joanathan, in a country like Nigeria, where obviously what you've been talking about, there's a lot of positive things going on the macro front, economics macro. I mean, when you start to drill down to look at companies, when you look at typical markets like that in Africa or in emerging Asia, like what are you looking for to like sort of is it tricky to predict how these things are going to produce earnings growth? Like what's the secret sauce about trying to pick the right companies within a country like Nigeria or others?
Well, I think you can do it in a complex way and really look at sectors and see how those sectors are going to rebound. Obviously, there are plenty of oil plays in Nigeria that people have been able to invest in. We tend to shy away from direct commodity plays and the sector overall. Clearly, there are sort of consumer plays that you can invest in if you're expecting a turnaround in the macroeconomic performance of the country, although consumers in Nigeria have been sort of battered quite hard for the last several years. We have tended to take an uncomplicated view that banks offer you the best geared recovery or best geared correlation to macroeconomic recovery. And we've known the banks in Nigeria for a long period of time, and we know the managements that we believe in and have really believe that they have high quality management, and we take advantage of buying them at all-time low valuations, and then really we'll kind of just let them run, and we won't do anything to those positions. I think if Nigeria continues the way it's going, I think that can be at least another 3 to 5 year play for us there. Now, would we potentially add other positions as we get more confident about the policy set and the continuation of the reforms? We could do, but at this stage, we like the play that we've got, and I think we'll probably leave it at that for the time being before we get confident enough to go into some of these other sectors that may have recovered somewhat in stock price terms, but maybe a little bit more complicated when you're looking at their ability and how they're going to look for the next 3 to 5 years.
A lot of emerging markets have very high weights of the financial sector, particularly in Asia, like the Philippines or markets like that, but also in frontier markets. I've noticed that the financial sectors are very big. So is this a strategy you can implement across the board in your portfolio?
Yeah, pretty much. I would say that in most countries where we're invested, that we probably have a financial services company, at least one, maybe more, where we're invested. And again, that sort of, that can vary from time to time in terms of the stock price and the opportunity that we see for that particular bank or that particular financial services company at the moment we invest. But, in the long run, if you have the right management, they should be able to exploit growth of the macroeconomic variety for that country in a leveraged way. And then you're really you need to be guided by valuation discipline. We've all seen, there was a bank in Egypt once that traded about 3.5 to 4 times book value, and everybody loved it. And then, about 2 years ago, it was trading below book value. So these cycles can be very, very intense, and therefore you like anything, you can't fall in love with in anything forever, and you've got to have valuation discipline and be able to trade that around.
Yeah, but you just look at Brazil, where Banco Itaú, I think it peaked in 2007 at also like almost 5 times book, and then it went all the way back down to below book. And it's still
Yeah.
not back at its 2007 level in real terms. It just passed it in nominal terms, in nominal dollar
Right.
terms. So this takes a long time
Yeah.
to recover from these bubble peaks.
Well, you've put out some very interesting charts on Brazil and the valuations of that market, and what's happened to it over the last 10, 20, 25 years. And I was like you looking at Brazil back in, I think, in 1991 when Anexo Quattro was first introduced, and we were, I think, at James Caper, we were the second broker dealer to be licensed to operate under Anexo Quattro. So we have seen that massive cycle that you talked about, and that's the beauty and the opportunity of the emerging markets generally. Frontier emerging is you have this massive volatility that can be that is created by the macro and political and policy story. And, as we say, the train, you never miss the train. It always comes around again. And,
Yep.
so then you're, what we have to do is we have to be disciplined. We have to say, okay, there's just no way that bank trading, frankly, much above 2 for me, but we'll see. But it's sort of basically, you're that's an awful lot of sort of free money that you're leaving there on the table valuation wise. And the beauty is that we've got 20 odd other countries that we can look at, and there's probably always something that's going to look a bit more attractive than buying into a bank at 5 times book.
The Philippines is a market that's hasn't taken off in this nice emerging market rally. What is the problem there? Why are you expecting a recovery, another bull market in like the Philippines has had many in the past?
Yeah, it's sort of the widowmaker trade in reverse. We've been we've been looking for the rebound in the Philippines for some time, and we're beginning to, I have to say, get a little frustrated with it. Look, so I think there's 2 things that the Philippines is having to deal with. I think one is last year there was this, just when I think it was poised to really take off and do well, there was this big corruption scandal surrounding the infrastructure investment, which hit the country, obviously, especially after the, after the typhoons there. And I think that really blew confidence out of the market. And the president there has said that he's going to get to the bottom of it and all the rest of it. And they've arrested maybe some people. But, there hasn't been what I would describe as a full accounting. And you have to be a little careful because, if it's going to be done in proper due process, you can't just arrest, convict, and lock somebody up in 3 months. You'd sort of not want to see that either. But clearly there's been a sort of frustration about how long it's taken to kind of find the guilty parties and so on and so forth. And obviously, in the meanwhile, the government has stepped back and is not spending the money that's sort of there that was meant to be spent on the infrastructure, which obviously at the macro level is a big fiscal stimulus. And this has impacted confidence as well. And I think, again, people are waiting for that. And again, you don't want to see them just suddenly turn on a dime and start spending money again within a couple of months, because then you say, well, did you learn anything? Are you doing it differently? Or how can you be doing something differently within 2 months? I mean, these are governments that, processes that take time. But I think that's really what caused the derailment, last year when it was ready to go. I think that now, I think there is a concern that from our perspective, that the Philippines has a significant business in call centers and, business processing, companies generally. And obviously now we have the great AI boogeyman. So, and call centers represent, I think, sort of 7 or 8% of Philippine GDP.
Yep.
And if that is sort of under threat in some way, I think there's a concern that, again, that would be another headwind for the country, and that would impact sort of sectors across the board if there's going to have to be a sort of digestion of the I don't know, millions that work in that industry, and then obviously all the millions that then serve the people that serve that industry. So I think that might be another aspect that's going to concern people in 2026 after we saw the 2025 issues. But the companies there, there are a lot of companies there that are trading very, very cheaply right now.
Yeah. The call center is a big issue. The stocks, the call center stocks, like the big ones traded in the U.S., have gotten massacred. So that's not a good sign for the Philippines. When you look around emerging markets and frontier markets, any other potential victims or potential winners from this AI revolution?
Well, there are some, software services company that are ostensibly in the emerging market universe, and they certainly, several that we know of have been significantly. I'm sorry, that's my automatic light. Have been significantly impacted by this AI story on software services company. And I think that I think we're at the stage in the market where the babies are being thrown out with the bathwater. There's no real discrimination being shown. And time will tell whether that's the right thing to do, because these businesses are just going to be growth challenged now for effectively forever. And then there's going to be an opportunity cost of money to being invested in these companies. Or do these companies themselves have their own AI capability that some of them have clearly been talking about, that they've been developing for the last few years, 5 years, whatever? And can they integrate that AI capability into the software part of the IT support that they've been giving their clients for the last 5, 10, 15 years? And then it's the question of, well, big companies or small companies, once you have a relationship with a software supplier and you understand them and they understand you, do you really want to walk away from them and suddenly say, well, I'm just going to kind of do it on my own with Anthropic? So I think we're at a point where that's a very difficult question to answer with absolute conviction right now. And we would tend to believe that there's certainly some of these companies do have AI capability, very significant, good quality, will be able to integrate it with their software service business, integrated into their client relationships that they have. The clients will be happy to continue with the relationships that they have, because changing a relationship is always tumultuous, and so on and so forth. So we would probably be on the side of, there's probably some opportunity in some of these companies that have been very badly hurt in this particular sector. But good people can differ on that on that assessment.
On the issue of global trade and how the trade relationships between countries are changing quickly, what's your view on particularly Southeast Asia, which was a big beneficiary of these of the export trades, and they seem to be suffering now? Thailand, Indonesia, Philippines. Is there a connection with the sort of deglobalization? Is it other things? How do you see this issue affecting those countries?
So, yeah, look, a very complicated subject. I think the way I start to look at it is, what is the US political consensus on this? And there's clearly been a huge change in the mood and the consensus, driven by Trump starting in Trump 1 administration. But even after Trump and the Biden administration, there was no real, change. I mean, they didn't go back and suddenly say, "Oh, China, we're going to go back the way it was." I mean, I think there's a sense of, I would say the key word is reciprocity. So I think from the American side and the American political side and the consensus that I see is that between both Republicans and Democrats, there's a sense that free trade means free trade, and that goes both ways. And I think the reality is that for a very long period of time, it was kind of a one-way street. And a lot of countries did have unfair trade practices, not just China, but including India, including some of the countries that you mentioned, and that they would not allow access to US products or even European products or whatever. So I think there's a sort of, so that's where I see philosophically, from the US point of view, that's where the political establishment is at, reciprocal free trade. Now, that's going to create, some disruption for some of these countries, because some of their industries that have been protected for the last 20, 30 years, maybe longer in some cases, but effectively for a very long period of time. And there's going to be some disruption for these countries in some of their industries. And in that process, yes, Vietnam as a country is going to, I think, do well overall from continued access to the developed markets. But they'll have some industries that are going to suffer, maybe in agriculture and so on and so forth. But that's the sort of the price of entry. And so within that, there'll be some bumpiness. But I think that's going to be the picture going forward. And as to which countries can manage that or will be able to manage it better, will just generally have less exposure to that disruption. That will be the thing that we look at. And obviously the big other story is that China is clearly going to see less foreign strategic investment it already has for the last few years. And therefore, there's going to continue to be a flow of investment dollars into other countries over a period of time. Again, is it going to be sort of instant gratification? No, but there's going to be a trend there that should be positive, albeit with some disruption in some other sectors where they're being opened up to competition from the US and from other developed markets. I think it's healthy. So I think it's positive, but you're just going to have to work out. And I think obviously, so long as we have the current president in the US, there is going to be uncertainty. And that's, to me, that's the major problem for the next 3 years. Whatever the Supreme Court says and Trump reacts and this and that, is just creating uncertainty. And that means that's bad for US businesses. It's bad for businesses in these countries because no one knows where they are. And so with uncertainty, you tend to get paralysis. And paralysis is not what we want to see in our markets for investing purposes.
How much of Vietnam's success is just Chinese offshoring right now? Is that a big factor?
That's a good question. I think it's significant, but I don't think it's the driver. So I think that it may have initially been some of the fastest action was, this sort of Chinese exports into Vietnam that were then repackaged or partially assembled or whatever, and then passed on in terms of exports to the US. Clearly that happened. It was significant. I think that is the crux of the issue for the US-Vietnam trade relationship. But what we're seeing is certainly in the sort of broad technology, say, industry and maybe some other industries, we're seeing enough investment by enough different international groups like Apple or Taiwan Semiconductor or whatever. So these big groups are investing directly into Vietnam and creating local ecosystems, local supply chains. So we think that going forward, the strength of that story and that investment will really guide the performance of Vietnam. And sort of the Chinese angle will essentially gradually diminish in importance to Vietnam. Obviously, it represents a low quality business from Vietnam's point of view anyway. It's not a great high margin business. So at a country level, they don't really want it. I don't think they really want to say that, but I think that's the reality in business terms. So I think it'll change, and I think will become less important. And in the meanwhile, foreign direct investment in Vietnam continues apace.
Vietnam is really trying successfully so far copying the East Asia model, right? It's very similar in what the other countries do. Can that model still work in this new world where people are fed up with mercantilism and subsidies and so forth?
Well, I think if the countries concerned have opened up their markets, and we get back to my guiding light, which is reciprocal free trade, then I think yes, and then you can get back to that old economic story of comparative advantage. So I think it can work, but I think clearly the US, as I mentioned earlier, the consensus politically is about reciprocal free trade, and I think the Europeans even are sort of coming down that road and understanding that road too. And so I think that, I think long term we can get back to a healthy reciprocal free trade environment across nations. We'll see how that divides up between the different countries, and who lines up with China and who lines up with the West, so to speak. India, maybe somewhere in between, we don't know. But there's going to be a sort of I'm positive overall, because I think that it makes sense for all countries concerned.
How is the Vietnamese Communist Party different or the same as the Chinese Communist Party?
I hope, I believe that it's different to the extent that they've seen what happened in China. And obviously there's this balance between, so they've got the job of delivering economic growth, delivering jobs. And if they're successful in doing that, then, the citizens will leave the sort of the CCP alone. That's the grand bargain, which the CCP itself kind of failed at recently. Putin and Russia has failed at it, with multiplied by 5. And I think, therefore, what the Vietnamese Communist Party understands is that bargain is an important bargain, and they have to live up to that bargain. And what we've seen policy-wise so far has been positive, especially under the new president, effectively, of To Lam. And I think that as we've analyzed the moves that he has made, some give rise for some caution, but mostly we believe they are designed to, and he always talks about, we've got to grow at 10% plus a year. And we've got to do what we can to grow at 10% plus a year. And that's an admirable objective. I'd be a little bit concerned if that was the sort of number that they live and die by. But I think it shows that they understand that they need to create growth, and that's the answer to a happy, content country, that everybody is making money and doing well. And I think that there's less, China is such a big country and with such a big population. The history and culture there is a little different in terms of the imposition of centralized control. And there's a much greater sensitivity about that in China for obvious reasons. And I think in Vietnam, you have a scale country with 105 million people, but you don't get that sense of concern that sort of people are doing things thousands of miles away that might or may not be a threat to your hegemony, so to speak. So I think, there are differences in that respect. I think, the VCP has looked at what's happened to the CCP, looked at how some policies worked, some didn't, where they went wrong. Of course, the difficulty for Vietnam is that they have this big, humongous sort of overbearing, country that neighbors them. And like other countries in Southeast Asia, they have to be very careful about how they handle that relationship. So far, there's nothing that I've seen that indicates anything other that they're managing that relationship appropriately, sensitively for the Chinese, whilst being busy growing their economy through as much investment as they can get from all across the world. You kind of see this theme in some of these other countries. Kazakhstan is the same. The president there has very clearly, recognized that his job is to balance interests between the various different, power centers, China being one, Europe, Middle East, US, encouraging investment from all comers, not just Russia, etc., and knowing that politically he has to be very careful how he handles the relationship with Russia. And he does that. But if you read between the lines on some of the things that he actually does, as opposed to what he's saying, you'll notice that there's a very consistent policy there to diversify the investment flows and make sure that they are seen as a country that has interested parties outside of just Russia, and same for Vietnam, outside of China, and that's sort of their protection, if you like, from overt bullying.
The Vietnamese market has performed very well over the past year. Do you think that's mainly because of the likelihood that it will join the emerging market index, or it's driven by fundamentals?
Okay, so here's another one where you have to look at the micro level of what stocks did well last year. Yeah. And there were 3 stocks in particular that caused the index to go up, I think, whatever it was, 39%, I think it was. If you take those 3 stocks out, actually the index, so to speak, X those 3 names, the index was only up 15%. And it's very interesting because I'm pretty sure, in fact, I know that none of my peer group, very few international investors, had any significant exposure to those 3 names. And therefore, everybody at the index level, everybody underperformed because of the 3 names that performed so well. One of the stocks was up 8 times last year. Uh-huh. And without naming names, what I would say is that the group that those names represent are ones that have generally caused international investors to be concerned about, shall we say, transparency, corporate governance, etc. And so it's interesting that the headline performance looks extraordinary. The underlying performance, X those names, is a little less interesting. Having said all that, Vietnam has done well. And yes, they've clearly indicated that they are committed to doing what it will take, firstly, to get into the FTSE Russell Index. That's a decision that's going to come relatively soon. And that obviously doesn't have the heft of MSCI. MSCI, I think, is going to take a couple more years. There are certain technical things that they just have to do in order to allow for MSCI to upgrade it to EM. But I've absolutely no doubt they are committed to achieving EM status sometime in the next few years. And I think that's not going to drive our investment process, but it will, offer certain, comfort to us in terms of, as we see foreign investors, not just at the FDI level, but also at the portfolio level, that they actually will invest. Now, again, an interesting fact: foreign investment into Vietnam in 2025 was massively negative. So what was very interesting is that last year, foreign investors took, I mean, $2 or $3 billion, maybe more, out of the stock market last year. All of that was absorbed by local investors. So quite an extraordinary thing, actually, that the market managed to do okay, and even X those three names, in the face of what were very, very strong outflows from foreign investors.
What's the explanation for these outflows?
I wish I knew. You know, I don't know. I don't know how much of it was what I would describe the type of investors like us. Not too sure. I'm not too sure if there was a lot of selling by investors like us. There may have been some, switching around and that type of thing. I think there was much more sold by, investors out of some of the other Asian markets like Thailand and Korea and so on that have been very active in Vietnam over the last 7 or 8 years, and they've tended to kind of cycle in and cycle out, and have moved in sort of big, relatively quick moves that in the past would have had a very significant impact on the market, but in 2025 it didn't. And Vietnam is now at the stage where it trades over, on an average day, it's trading over $1 billion a day. So it's a pretty decent sized market now. And so the sort of foreign influences compared to 5 years ago is significantly diminished.
Who are the local buyers? Are these retail or institutions? Who's driving this?
It's retail. Part of the cultural beauty of a country like Vietnam is that they're as greedy as anybody. What I like about Vietnam is that they all want to make money. They're very aggressive capitalists, from the top all the way down to the very bottom. No matter who you are, there's this desire to succeed, and that starts with great education, but there's just an inherent culture of wanting to build and grow and get rich, and to do what's necessary to be successful at that. And that's one of the reasons why we think that Vietnam has a sort of long-term positive story to it.
Joanathan, when you look at the investors who have allocated money to the frontier markets or even small cap emerging, which I think is an asset class, through the years you've been involved, and obviously talking to a lot of LPs, etc. Those investors, over this last sort of dead period of 10 years, have they peeled back? And what do you think is going to sort of get them back in, or get the mainstream to say, hey, we need to allocate this, other than 1 year of performance?
Yeah. So I think look, quite a few investors were originally over allocated to EM. If you go back 7 or 8 years ago, I think, or certainly they were sort of up at that level where it was maybe 10-11% of a equity portfolio. I think these days it's down like at around 5 or 6%, and so this dead period has been dead, and as other markets have gone up, and as EM has sort of gone down or treaded water or whatever, that's where we're at. We've seen a significant sort of lack of interest in asset allocators wanting to come into EM, and to come into frontier small EM, no matter the performance. This was a top-down issue, as we mentioned earlier. It was people's perception was, well, I can just make a lot of money in the US, so why bother? And EM has been disappointing. I think that hopefully, as Jean mentioned earlier on, there is a sort of simplicity and beauty to the dollar idea, which I think might help at that top-down level. And it may not be necessarily the right reason from my perspective, but I'm not going to argue with it. I'll gratefully take any money that's coming in as a result of that. I think there's a push pull. So I think the push is that the U.S. markets may not be at a stage where they're going to do as well in the next year or two as they've done in the last few years. And I think there's a sense that there are opportunities elsewhere, and I think the pull is in EM generally. There is the opportunity to buy good companies growing well at cheap valuations relative to what we see in the US or the developed world generally. And then if you drill down from there, the story becomes just only more enticing and exciting when you really get into the countries that are really good, and the companies and sectors that are really good within those countries.
In addition to Vietnam, what are some of the other countries that you're keen on?
So I'd say in terms of allocations where we're heavy, just in absolute or relative terms, Egypt is one where we started to build positions there a couple of years ago, and it has done well for us. But we think, as I mentioned earlier, that there's a lot of opportunity there for the long runway for interesting businesses, underpenetrated sectors basically in Egypt. And with a reform process that seems to be going well, we would like to see some privatizations of some state businesses just to show that the army doesn't run everything in that country. So we remain watchful on that. I'd say the Middle East, is interesting as well. The UAE, I think, is, and when I say the UAE, obviously we're sort of talking about Dubai on the one hand and then Abu Dhabi on the other. And people know that Dubai started building its sort of non-oil economy 20 years ago, and or even more, and was very successful. Obviously, a little hiccup in the great financial crisis, but they got through that with the help of their brother in Abu Dhabi. But I think at that moment, that's when I think Abu Dhabi started to look at what Dubai had done, what it had achieved as a tourist hub, as a sort of financial sector hub, trade hub, Emirates Airlines, you name it. And I think they sort of said, well, we can do that too. And I think that they've been building that for the last, 5, 6, 7, 8 years. And we see some, I think, good opportunities, across the board there, as they have reformed and as they have made a very deliberate decision to invest heavily to make themselves a tech hub in the Middle East. I think they can try and make some gains on the financial side, but they have a situation where they are much less sensitive to the oil price than Saudi. It's just they've got more money per capita than Saudi has, and they're less sensitive to the oil price of oil, and they can invest heavily in these sectors. At the country level, they can move aggressively and quickly because it's a smallish decision-making group, shall we say. It goes into the sort of guided democracy. Well, it's not even a democracy, but it's a sort of benign dictatorship, shall we say? We'll put it as a benign dictatorship, and so we think they're doing some interesting and exciting things. So that's one where we've been building some positions over time, and outside of that, it's sort of a smattering of investments. Obviously in Asia and but also Eastern Europe and some stuff here in Latin America.
The new government in Chile coming next week, I think.
Yeah.
Do you see opportunities there?
I would say we probably missed the boat there, to be honest. Sadly,
everything's moved very quickly. Yeah, the banks like tripled.
Yeah. It's sort of it's disappointing. Chile is within my opportunity set, and I think that we were sort of looking elsewhere, and we missed that one. At this stage, I think we are looking at one or two things, but the sort of quote easy money may have been made there, and we'll have to see if there's some other stuff that still has some legs to it. But sadly we missed that one.
Do you get involved in off-index markets like Argentina and
Sure.
and are you starting to look at Venezuela as a potential as well?
Yeah, we've had the question. I was involved from the investment banking side in Venezuela going back to the early 1992, 91, 92. Extraordinary. To think about it. Here we are 30 years later. Look, honestly, from an equity point of view, there's nothing that we can do. Nothing, if you want to buy Chevron because they might do well in Venezuela, go ahead, but that's not kind of what we do.
Right.
So there's nothing for us to invest in on the equity side that makes sense. We used to run debt, and I used to run some debt funds. So I'm also always looking at the debt markets. They tend to anticipate sometimes what is going to happen in the equity markets.
Mm-hmm.
Obviously there was a big run up in debt. I would just say Venezuela is going to be a horrendously complicated situation. And, if I were a debt holder and I'd seen my debt rally 20 points in the last 6 weeks, or, I guess even overnight on January the 3rd or whatever it was, I'd probably be taking my money out and going elsewhere, or I'd be putting those, those investment, those sovereign bonds into my grandchildren's, investment account. I think Venezuela is going to be a horribly complicated story, and there's a lot simpler places in the world to make money.
Joanathan, sorry, I apologize. Listen, thank you very much. We've taken a lot of your time. It's been awesome to talk about how you look at these countries that a lot of people have fallen off the screen for a lot of people, but now I think we're going to see, I think you guys are in for a nice run for quite a bit of time. So congratulations on that.
Well,
thank you.
Appreciate that. As I say, seven lean years, hopefully 7 fat years. We'll see.
Exactly.
Appreciate your time. Thank you, and I apologize. I hope the internet was not too disruptive.
Not a problem.